In the last lesson, we talked about sales. Now that's your top line before paying out any expenses. But the product or service you sold likely cost you something to produce or deliver, right? So that's exactly what we're going to talk about now. Nicknamed COGS because accountants are lazy and like to make our jobs sound more important. Let's talk about cost of goods sold. Now, the textbook definition of cost of goods sold is the accumulated total of all costs used to create a product or service which has been sold. Now, these costs fall into general subcategories of direct labor, materials, overhead. In service businesses, the cost of goods sold is considered to be labor and payroll taxes and benefits to those people who generate billable hours. Now, in a retail or wholesale business, the cost of goods sold is likely to be merchandise that was bought from a manufacturer. It doesn't include general, selling, or administrative costs of running a business, which we'll discuss more later. These are also called overhead expenses. Now, the definition you need to know is that cost of goods sold is literally exactly what it sounds like. It's the cost to make the sale that you just recorded as income. And what makes up your COGS will depend on your industry and your type of business. If you're a retail store, your COGS is going to be high because if you're a furniture store or a toy store, you have to purchase those products first and then sell them. On the flip side, COGS will be really low for a human resource consultant who does all of the work herself and doesn't have any staff. Cost of goods sold and overhead expenses are treated no differently for income tax purposes. They both reduce your federal taxable income just the same. However, it's important to separate those two main types of expenses when maintaining your books so that you can analyze whether or not you're actually making money on what you're selling. After you reduce your income by your COGS, what's left is your gross profit. And the gross profit is just a fancy way of saying that's the money you're left with after selling your product or service. And that leftover money can be used to pay for your overhead expenses and to pay yourself for all that hard work making those sales. We'll learn about overhead expenses more in the next section. Where are COGS on your financials? Your cost of goods sold show up on your profit and loss or income statement. If you found this video helpful, we're real accountants and CPAs who work with hundreds of small business owners just like you every day. Check us out at engagecpas.com to see if we're a good fit for your business. We also have business courses available to help small business owners understand their business. They're for you to learn about your financials, your taxes, how to pick the right entity, tax myths, and everything else about your business. Learn at your own pace. Check those courses out on the Education tab on our website. You can also find us on Instagram at Engage CPAs.